Have you ever wondered what the volume indicator means in technical analysis? Well, let me break it down for you. The volume indicator shows the total number of shares or contracts traded in a given period. It helps traders determine the strength of a price movement. When the volume is high, it indicates a lot of buying or selling pressure in the market. If the volume is low, it suggests a lack of interest or participation from traders. Volume can confirm a price trend or warn of a potential reversal. An increase in volume during an uptrend is a positive sign, suggesting that more people are buying. On the other hand, a decrease in volume during an uptrend could indicate weakening buying interest. In a downtrend, high volume during a price decline suggests strong selling pressure. Low volume during a downtrend could signal a lack of conviction from sellers. Volume can also be used to identify potential breakouts or breakdowns. If there is a significant increase in volume when price breaks a key level, it may indicate a valid breakout. Conversely, a decrease in volume when price breaks a support level could suggest a false breakout. Traders often use volume indicators like the volume moving average or on-balance volume to track volume trends. The volume moving average calculates the average volume over a specified period, giving a smoother view of the volume trend. On-balance volume compares the volume on up days versus down days, helping to identify buying and selling pressure. Remember, volume is not the only factor to consider in technical analysis, but it can provide valuable insights into market sentiment. By paying attention to volume, traders can gain a better understanding of price movements and make more informed trading decisions.